Hi. It's always tough to conduct a session post-lunch, especially when the lunch is very sumptuous. So just to get the audience engaged and keep you awake post-lunch, we have planned a quiz. Since this is a capital markets conclave, we have a set of questions which are related to the capital markets. So I'll start with the questions one by one. There is a prize for each correct answer. So we have volunteers here who will be coming and handing out the prize. It's a nice piece of chocolate. So here we go. First question. We all talk about listing, right? My colleague Arjun is working on listing regulations and working very hard to get. Yeah. So my colleague Arjun is working very hard to get the listing regulations executed and get the first company to be listed here. Markets. So the first question is, which was the first publicly traded company in history?
Is it Dutch East India Company?
Absolutely, that's correct. So why don't you? So the Dutch East India Company, or known as Verenigde Oost-Indische Company, V0C in short form, 1602 it was publicly traded. Great answer, sir. Next question. Which famous financial index was originally calculated by hand using pencil and paper and published via telegraph? So from the question you can realize that this question is at least 100 years old, right? So any guesses? Yes, it was the Dow Jones Index. Pramod Rao, sir. So two basic fire starting icebreaker questions. Let's move to the third one. Okay. One of my favorite personalities, all-time favorite personalities. Identify this favorite personality, and I'll give you the hint also. I think people know this. It's related to the book that has been distributed to the speakers 1929. He is related to 1929, the Great Depression. Identify this famous personality in the picture. Show of hands, please.
Adam Smith?
No. Akash. It is Jesse Livermore. Yeah. So Jesse Livermore is considered to be one of the all-time great stock market traders in the history of capital markets. In 1929, he went short on certain stocks, and he was called mad, you know. Subsequently, when the Great Depression unfolded, he made over $100 million in profit, one of the largest profits in stock market trading in history. He's reputed to be one of the greatest traders of all times, and the book was written on him. It's called Reminiscences of a Stock Operator by Edwin Lefebvre. So, next question, please. Which market famously closed for 4 months, not because of a crash, but because of war? Show of hands, please. Anyone who wants to attempt the question. No negative marks. When I say market, the exchange, stock exchange, because it's a capital markets conclave. No? You can name the war also, in case you're guessing the stock exchange. Can you give her the mic, please?
US stock market?
Close. You have to tell the exact stock the exchange.
US-Vietnam War?
No. It is the New York Stock Exchange. Yeah, she's revised the answer, but it's correct. New York Stock Exchange closed for 4 months during World War I, 1914. So next question. Now, all of you are fans of Hollywood movies. This is an iconic Hollywood movie, right? This is a picture from an iconic Hollywood movie. When I was in my second year MBA, I seen this movie at least 30 times. The movie was made by Oliver Stone for a particular reason, but it had an opposite effect. I'll tell you after the quiz, the question has been answered. So the question here is this: based on the picture that is displayed on the screen, name the movie and the character played by these two famous actors. You can name the actors also, no problem. But the characters in the movie played by these two actors, and name the movie. Any guesses?
The name of the movie is Wall Street.
Wait, who's attempting the question? Could you please stand up, please?
The name of the movie is Wall Street.
That's correct.
And Michael Douglas and
Yeah. So you have to name the characters played by both of them in the movie. Yeah, Gordon Gekko and Bud Fox, but you had assistants, so you can split the prize between. Yeah. Okay. Just go back to the slide. Yeah. So the movie was released in 1987, made by Oliver Stone, and it's centered around a famous insider trading scandal that took place in the U.S. in 1985, which led to the arrests of a lot of Wall Street executives. Michael Douglas won the Best Actor award for this movie. So the next photo is related to this movie. Okay. I'll answer this and I'll come to that. So this is a cover of Time magazine, okay, dated 1986. There is a person on the cover of the Time magazine. He has a direct relation to the movie that was displayed, to the Wall Street movie. Identify this person. Tough question. Close, very close, very close. It's not Michael Milken, very close. No, sir. Very close. Pradeep sir knows the answer actually, I think. Very close. He's in the same book in which Michael Milken is mentioned. Any guesses? It is Ivan Boesky. Who said the answer? It is Ivan Boesky. So he was known as Ivan the Terrible. So now, if you go back to the Wall Street slide, and I'll answer Edie sir's question. This is a very iconic photo, actually. Go back to the Wall Street movie poster. Okay. Now, if you've seen how many of you have seen the Wall Street movie? This movie? Okay. There is a famous scene in the movie where Michael Douglas, aka Gordon Gekko, goes into a boardroom meeting of a company, and he says, "Greed, for the lack of a better word, is good." Okay. He makes this iconic statement. Now, this statement apparently is based on Ivan Boesky. Ivan Boesky was a famous insider trader on Wall Street, and he used to go in meetings of company boards and used to make a statement that greed is healthy. So the character of Michael Douglas in this movie is inspired by Ivan Boesky, and that statement, okay, actually in real life such a statement was uttered by Ivan Boesky, and the movie and the character of Michael Douglas in the movie Wall Street is based on Ivan Boesky. So if you want to read more about this insider trading scandal, there is a book called Den of Thieves, written by Patrick Stewart. He won the Pulitzer Award for investigative journalism. It's one of the finest books ever written on Wall Street and insider trading scandal on Wall Street. Extremely deep investigative journalism. So this is what I would encourage you to read. In fact, Edie sir, when we were preparing for this conclave, Pradeep sir said that why don't we give Den of Thieves as a memento to all the speakers. But apparently the heading was a bit too controversial, The speaker might misunderstand, so we decided against giving that book. Yeah. So to answer Edie sir's question, the movie was made by Oliver Stone to highlight the dark side of Wall Street. Okay, so it was basically intended to make everybody aware of what the dark side is. On the contrary, after seeing the movie, it inspired a lot of people to apply for jobs on Wall Street. Right? Honestly, when I was in my second year MBA Finance at Nasim Monji in 2007, I saw this movie 30 to 40 times. Of course, it's a negative, it has a negative ending, right? And in the negative ending, it's a regulator who comes and arrests that trader, Bud Fox, right? I never even thought when watching the movie that I would end up becoming a regulator one day, So, yeah. So, next question, please. Okay. You all have heard about GameStop, right? GameStop 2021. That share price which skyrocketed. Okay, so the GameStop short squeeze of 2021 is widely remembered as a Reddit. Reddit is a social media platform, Reddit-driven revolt against Wall Street hedge funds. Okay, in this saga, the retail investors hit back at hedge funds. However, the individual who ultimately profited the most was neither a typical Reddit trader nor a hedge fund manager. He had built his position quietly over 18 months, consistently sharing his investment thesis in public, on Reddit of course, while being largely ignored or ridiculed. At its peak, his initial investment of $53,000 grew to approximately $48 million. This is in the GameStop saga. Who was this person? And what was the name of his YouTube channel where he documented his analysis? And I'll also give you a hint. Netflix made a documentary on GameStop, beautiful documentary. That person is mentioned in that documentary. So, yes, Mannar from Liminal, I can see his hand up.
Yeah, so I know the YouTube channel. It's Roaring Kitty. I don't know the name.
First, identify the person.
No, I don't know his name. I forget his name.
You got the YouTube channel right, but the person, you have to guess both the answers. Yeah. It is Keith Gill. That's correct. So you can split the price between the two. So it's Keith Gill, who was active on Reddit, and his YouTube channel was known as Roaring Kitty. Okay. One question before I ask this question. Okay. How many of you have heard about the South Sea Company bubble? How many of you? Sir, please. Can you give him the mic? Yeah.
Mine would be Isaac Newton.
Yeah, that's correct answer. So, South Sea Company is regarded in financial history as the world's first Ponzi scheme, and also the world's first share price crash. So basically, in 1700s, the British Empire had created one company called South Sea Bubble, South Sea Stock, for handling the British debt, British national debt. And Sir Isaac Newton invested in this company. He initially made a profit when he sold his shares early. Then he bought it back at near the peak as prices kept rising, losing approximately 20,000 pounds. Okay, 20,000 pounds in those days was a hell lot of money. So it was equivalent to several $1 million if you apply the time value of money today. So as it is most popularly reported, the man Isaac Newton, who could calculate the motion of heavenly bodies, could not calculate the madness of people. So there was a crowd mania which went into investing into this stock, and eventually it popped off as a Ponzi scheme. Next question. Every action has equal and opposite reaction. That's correct. The term blue chip, used today to describe the most stable high-value stocks, was borrowed from which game, and what made that particular color the obvious choice? Pradeep sir.
I'll answer this if others are not answering, because I shouldn't.
No, you're the only hand that's up.
Oh, great. Okay, that's poker, and that's because it's got the highest value.
Perfect, perfect, excellent. Next question. This American economist spent his entire career warning that financial markets were inherently unstable and that a catastrophic crisis was inevitable. Mainstream economics ignored him completely, something which you have heard lot many times before. The Economist magazine mentioned him exactly once in his lifetime. He died in 1996, never having received a Nobel Prize. 12 years later, the largest financial collapse since the Great Depression proved him right in every detail. You had the 2008 subprime crisis. A single two-word phrase became the most repeated term on trading floors from Wall Street to Dalal Street. Who is this economist? Supriya sir.
It's Hyman Minsky and the
That's
Minsky
correct.
moment.
That's great. Yeah. He raised the hands first, I'm sorry. Yeah. That is correct. Hyman Minsky was the economist, and the two-worded phrase is Minsky moment. Next question. Okay. In the old open outcry days of the Bombay Stock Exchange, and this is a tough question in fact, and please don't use Google. In the old open outcry system, you had this trading pit on the Bombay Stock Exchange where the open outcry system, they used to show hands and then trade. What was the specific local term used for jobbers? In the bracket, these jobbers are market makers who specialized in specific securities, right? They used to buy and sell from brokers. They were known as jobbers. What was that local term that was used? Sir, just a minute. You can take the mic. No. You're close, but. No. No. This is one specific term that was used to describe these jobbers. So in today's world, they used to be an intermediary of an intermediary. So they used to buy and sell from a broker. Very close. No. The previous word that you used? No. Any other guesses? No. No. Local term. Yeah. No. So I'll give a hint. Of course, Let the gentleman guess, please. Yeah.
Lala.
No. So you have this term called dabba wala, right? The term ends in wala. It's a tough one. Very close. Hey, don't insult that family. Yeah. Who said that?
Taravani wala.
That's correct. Taravani wala. That's the correct answer. Taravani wala. Yeah. Taravani wala, yeah. If that's the right way of. So the next question, we're very close to the end. Who am I? I decided how much money companies would raise. I control share pricing and I disappeared. This is, SEBI veterans can answer this. Just a minute, let me finish the question. Or exchange veterans can answer this question. I control share pricing and I disappeared after liberalization, 1992. Who am I? Full form. That's correct, yeah. Next question, and I think most of you guys should be able to guess this one. One man sent the Securities and Exchange Commission of the United States a detailed, mathematically rigorous report titled "The World's Largest Hedge Fund is a Fraud." Not once, I can see Pawan's hand going up. Let me finish the question, I'll come to you since you raised the hand first. Not once, not twice, but 5 separate times over 9 years. The SEC investigated each time and after each submission found nothing. The fund collapsed anyway, taking $65 billion with it. Ponzi scheme, of course. Who was the fraudster? Yes, Pawan, yeah.
Madoff.
That is, Bernie Madoff is the correct answer, yeah. So Marco Polos was the investigator. You were close, yeah. So he submitted the reports to the SEC in 2000, 2001, 2005, and 2007, 2008. Each time the US SEC either didn't read it carefully or assigned investigators who lacked the quantitative skills to understand it. So 5 times a whistleblower brought a scam to the notice of the regulator and somehow it was missed, right? And this was a Bernie Madoff scandal. Yep. Wizard of Lies, yeah, yes, yeah. Next question. In 2021, a company called, and I expect at least the hedge fund managers here to answer this question because you were involved in this. In 2021, a company called Signal Advance, and Signal Advance is the company which makes that Signal Messenger. Just this is another hint I'm giving it to you. Saw its stock rise 11,000% in 3 days. It had nothing to do with the company's actual business. What triggered this? Just show our hands first. One hand has gone up. Let me, because somebody from the last rows, nobody's answering. So anybody at the back rows? Anybody? I'll come to you, sir. You answered a question, so don't mind. Anybody at the... Yes, Vinayak. Please give him the mic. He's not a hedge fund manager, by the way.
I think around that time, Elon Musk tweeted about use Signal, and that triggered.
That's correct. That's correct. Brilliant.
People googling it.
Brilliant. Yeah. So Elon Musk tweeted use Signal on January 7, 2021, referring to Signal, the encrypted messaging app. So retail traders moving faster than they were reading piled into Signal Advance Inc., a stock. A tiny market cap of roughly $7 million US, driving it to approximately 3.5 million valuation within 72 hours. In fact, this was not only the first time that Elon Musk intervened for retail investors. In the case of GameStop also, he had put a tweet, if you may remember, GameStonk, after which the retail investors started piling positions into that equity. Next question, please. What was the specific philanthropic philosophy Sam Bankman-Fried, SBF, publicly espoused that made sophisticated investors, regulators, and journalists lower their guard? This was the run-up to the scam that he was... Akash, yes.
Effective altruism.
That's correct. So, SBF was the most prominent public advocate of effective altruism, a philosophical movement arguing that the morally correct approach to wealth, to creation of wealth, is to earn as much as possible in order to give it all away as effective as possible, right? Amazing. I believe this is the last question. So, in 2005, a relatively unknown economist stood up at a prestigious gathering of the world's most powerful central bankers, assembled to honor the retiring Alan Greenspan, Federal Reserve Chairman, and delivered a paper arguing the global financial system was heading towards catastrophic collapse. One of the most respected economists in the world called this paper misguided. He was described as a Luddite for questioning financial innovation. 3 years later, everything he predicted happened almost exactly as he described. Who?
Raghuram Raj.
That is correct, yeah. It was Raghuram Rajan. Yeah, for I have no comments to offer on that. So, that's it. With this, we approach the end of the quiz. So we have a next session. Yeah, thank you very much. Thank you.